Welcome back to another market open live stream. See what's going on in the market, in the world today. See if we've got a disaster or if we've got a good day ahead of us. I have no idea. I have not looked yet. So we're going to get to react together and figure out what the heck is going on. All right, so let's see. Jivo down 8%. Okay, so this is kind of what we expected yesterday, because that's kind of how we left off yesterday. So that's no surprise. Jivo's down about roughly 8%, 7.7% here. Nokia down about 5. Lemonade falling. Wow, these are okay. We got some red here. Lemonade down about 4.66%. And I have to say, there's if you have not watched the Lemonade CEO interview yet, it is so worth watching. Really, really good. It's not too long either. We had a nice timeline, so we had to get the good questions out right away, get it done. ZOM, EXPI, Invicta, Nokia, Nano Dimension, Open Door, Blink, SOS, all down here between 4.5% and 3%. Upwork, man, incredible, down 3% again here. BNGO, Neo, look at this. Neo just, it's shocking to me how many buying opportunities we're getting under 45, but keep looking at it like, well, kind of starting to run out of money here. Enphase also down 3%, 158 here. Fisker, BNGO, Zillow, Li Auto, geez, Xpeng, all these guys down 2-3%. There's Tesla again. Look at this bobbing we're getting. I feel like we've literally just been bobbing between 680 and like 705 for what? I don't know, 2 weeks now. The last 2 weeks have been kind of funny with that. There we go. Okay, perfect. So let's take a look at the chart here. Let's go to the hour chart and let's see how this bobbing has been doing. So this was kind of when we had the yeah. Look at this kind of almost relative flatness we've had here. Let's go ahead and just get rid of all of the lines that we have here. Yeah, let's see what we can draw. So we've got we had some somewhat of a sell-off yesterday, right before Jerome was talking, but it looks like we just can't get above this roughly 710 figure here, and that we're roughly trading, let's say right here, sort of between this 666, 667 number and 710. It's almost like we're boxed in here, and it makes you wonder, like, after what happened here with tech, the tech wreck, and then these bond yields jumping, it almost makes you wonder: are we going to be range bound at tech for a while? Is this an opportunity to buy, or is this just going to be a period of time where we get boring? We'll see. Upstart up 36%. This ran substantially yesterday after an announcement that they will be acquiring Prodigy, a retail. I'm going to mess up how to describe this. A retail solution for car dealerships. And we're going to be interviewing Shift, and by we I mean me. We're going to be interviewing the co-CEO and co-founder of Shift today at 9 a.m. So in about 2.5 hours. So that'll be super fun. We'll get to ask them about products like that. Anywho, then we've got, they'll be here on the channel. We've got AMC, Cost, GameStop. Okay, we've got a little bit of green here, but I mean, the exception of Luminar, which we'll have to see why we're up 10% over here, and Sundial up 5.8%, which we'll have to look into Sundial a little bit here as well after the bell. Other than these guys, I don't know. It doesn't look like we've got a lot of green. It looks like almost everything's kind of red here in the pre-market. So, oh well. Okay, let's see what's going on. We'll pull up the Bloomberg in just a moment and start trying to figure out what's going on with some of these places. Williams Sonoma. Wow, look at that. Really, really good earnings yesterday, by the way. Up 16% here. Really good. Canadian Solar up 8%. This one's been selling off for a while here. Lordstown, though, down 8%. Plug Power down 4% again. All right, folks, let's get the bell. It's pretty red. It's red. Hmm. Of course. What? Whoa, 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 whoa. Why, Jim? Why are you saying it that way? We are going to see inflation go up? That's not what he said. That's totally not what he said, Mr. Jim. He said we're going to see inflation go up temporarily. It's a big difference. Why would you not say that? Oh,
I think they use like some acronym or something like a fat.
Yeah, how long have I been without sound? Oops.
And they are down, as you just said, Apple, Amazon, Netflix, Alphabet, all down. Not dramatic.
Well, you put the kibosh on Netflix when you said that people like to go to the movie theaters.
What do you mean?
About a week?
Yeah, right. You just pointed out.
Okay. Wow. That's incredible. So it sounds like now we have audio. So good morning. I'm actually surprised you were all here. Thank you. So wait, you all just sat here for like 7 minutes and you didn't leave with no audio? Y'all are freaking heroes. Thank you. That's crazy. This is what happens when you don't set your Zoom settings right. Okay, so what was I complaining about? Basically, what I've been complaining about is Jim Cramer here saying that the Federal Reserve said, hey, Jerome Powell goes, hey, he said inflation's coming. Yet Jim Cramer doesn't tell us that obviously Jay Powell said multiple times yesterday it's going to be temporary. Temporary inflation is coming. Jim Cramer didn't say that. Jim Cramer just says, no, inflation's coming. And, is it Jim Cramer's fault? I don't know. That now it seems like we're in the
House of Pain.
That's his soundboard, by the way. So, yeah, I mean, wow. Okay, so, let's do kind of so that means I got to listen to the bell myself, but not you, which, sorry about that. But take a look at this. I mean, Upstart, I want to talk about this. So Upstart is up 49% here. It is now rallying on the open. They are picking up Prodigy as a retail service solution for car dealerships. Now, what's amazing about this is, and I feel like kind of fortunate, in about 2.5 hours, we'll be interviewing the co-CEO of Shift Technologies, which is a used car company that is a way cheaper valuation, in my opinion, than like a Carvana or a Vroom. A really, really good opportunity, in my opinion. But I'm trying to figure out, why did you replace your co-CFO? Why does Wall Street not like you? Why do the analysts not like you? What's their problem? It seems like you're a great company. So we'll get to ask those tough questions in about 2.5 hours, which will be super fun. We'll be here on the channel. We'll be moving up the course member live stream from the usual 9, because that's when we'll be doing this interview, probably to like 8:15 or something like that. Okay, so I do want to find out what's going on with Luminar. We're going to pull up the Bloomberg terminal here. Actually, I already pulled it up. And let's figure out what's going on with the 10-year. It sounds like a few things have happened this morning. We had unemployment claims that unexpectedly rose to their highest level. And on top of that, we also, it sounds like, have the yield curve spreading a little bit here. So let's see what's going on with the 10-year. Let's get down into the 3-day. Let's adjust this chart a little bit so we can actually see the darn thing. Okay. Yeah. Here we go. Oh, there we go. Okay, cool. Whoa. This is cray. So, whoa. Look at this. You know what's crazy is yesterday we had what's crazy is yesterday we started seeing kind of, J-Pow basically came out and just talked to everybody like we were 5, right? Talked to us like we were little children, and look, everything was going to be okay. And he started speaking right around 11 over here. So if we look at the chart, kind of right around 11, and he basically soothed us to sleep. It's like he read us a little lullaby and soothed us to sleep. Well, apparently, the market's like, well, now we're upset again. Where's J-Pow to give us another bottle? Because now it's starting to feel like a train wreck. This means we broke 1.75 on the 10-year, which is the highest that we have been in certainly over a year. Look at this constant rise we are seeing here. Now, remember, at some point, the 10-year is going to go back over 2%. That does not mean stocks have to be lower, but there may be some temporary pain in the meantime. It's so weird. We made this video on the channel here. We talked about how, what was it, a week and a half ago? I made a video. When is the market going to crash again? What do we need to be prepared for? Should we be, buying? Is the dip over and that's it? Or should we be careful and wait a little bit? And folks, it's good what we talked about in the video, that we got to be prepared for some big old volatility over the next 3 months, because inflation expectations temporarily went away, they could come right back, and come right back they have. J-Pow comes out and gives you 6 hours of happiness, and then you got a bummer right back. Look at this. We hit the lowest volatility yesterday in a bit. Let's zoom out to a month. We hit the volatility index hit a low in the last month of about 19.2. Wow, in the last 6 months, we hit a low on the volatility index. Let's go to year. No, not year to date. Year to date's really short. There we go. Okay, here we go. So we hit the lowest VIX in a year after J-Pow lulled us to sleep. And now we're popping back up. We're not at lows anymore at the same time as the 10-year treasury is literally at peak in the last year. So let's take a look at how the sticks are reacting to this. So Upstart reacting very strongly, finally getting its first red candlestick here in the day. Luminar, I want to find out what's going on with Luminar. I want to see what the numbers were with Sundial. Obviously, both of these guys are up nicely here. We've got, let's see here, Nikola, Gevo. Gevo actually recovering. This Gevo was down 8-9% there for a moment. They kind of got smashed after earnings, but now they're recovering. People just want their Gevo. People want their biofuels. This company, folks, made $500,000 in the quarter, which is really, really, really low. But still gotta love that Gevo. Plug Power, look, a lot of this down 3-4% here. Redfin, Enphase, Upwork, Microvision, the ones that have usually been pretty sensitive to rates, they're doing the same thing as usual. Pinterest, Tesla, same as usual. Sell. All of the high multiple ones: Tattooed Chef, Beyond Meat, Open Door, Hyliion, SunPower, PayPal, Tesla. PayPal's not even that high multiple, but all of these guys just selling. If you can get Spirit Airlines selling a little bit today, you don't have that much green. Let's put it that way. You've got Express, AMC, Sundial, Upstart, Luminar, and the JP Morgan. So let's see what's going on here. Let's go to the term and see if we could just figure out what are the top stories today. And then I do want to individually look at Upstart again, and some of the others as well, like Sundial. So bonds plunge. Remember, when you hear plunge, you think bad. If J-Pow wants inflation to hit 2%, why would anyone buy bonds at 1.5, 1.6%, even a 2% yield? Yeah, bingo. Bingo. So really, the only reason somebody would buy a 10-year bond at 1.6% or whatever is because they potentially, well, maybe they have to. Sometimes you need corporate treasuries, and you buy treasury bonds, and then you trade them over time. B, it could be for having an attempt at a balanced risk portfolio, which doesn't work so well because right now, as we see yields rise, the prices of existing bonds are falling, and a lot of stocks are falling. So it's kind of a funky environment. But the other reason, and probably I think the more prominent one, would be the people who are buying bonds right now don't actually believe that inflation will go to 2%. Remember, it's Jerome Powell's goal that we're going to get to 2% inflation. But he said something really powerful yesterday. And he said, look, we have not performed. We keep saying we want to get to 2%, and we don't. Like, we can't get it up. We're sorry. Anyway, all right. So what's the top story here? Inflation concerns are rattling investors worldwide once again. Oh, we need some. What do we need here? We need where's the machine gun? Here we go. That was too slow. No, you know what we could do? We could do. Here we go. Inflation concerns are rattling investors worldwide once again, fueling a sell-off in bonds and sending stocks down from their highs. 10-year Treasury yields climbed above 1.7% for the first time since January 2020, while the 30-year breached 2.5% for the first time since August 2019. Oh man. NASDAQ 100, a benchmark for high-val stocks that are sensitive to rising yields, sank. S&P reverse gains from yesterday. All right, what else we got here? Judging by the increase in yields this morning, financial markets feel the Fed might be too relaxed about the risks of an overheating economy and runaway inflation. I thought it was impressive how, powerful the Fed was about, no, we're not going to overheat. We're going to have temporary short-term inflation. It's going to go away. And the market really believed them yesterday. But then it's almost like the market slept on it. And the market woke up this morning and go, wait a minute. Did we trust J-Pow yesterday? Oh, heck no. It's bizarre. It is bizarre. So, all right, let's see. Goldman Sachs volunteer. Yeah, somebody here says waiting for the bottom to buy. Look, I don't blame you. I bought one stock, a little bit of one stock yesterday. And it was 0.7% of my portfolio. But today, these little these bar fluctuations, I'm going to call it. I'm not buying all these bar fluctuations because they're nothing special at this point. It's dime a dozen. It's easy to say, oh, I love Tesla under 700, but the bottom line is, look, we've been fluctuating under 700 for weeks. It's nothing special, right? So again, let's zoom out here to an hour. So as long as we're fluctuating, I feel like between these bars here, hey, you know what? I'm just going to keep saving up some cash, and I'll go shopping, when we break to the bottom here. We briefly broke yesterday to 650, which was right before the Fed was talking. So you would have really had to take a bet that the Fed was going to jump the markets, which they did. I thought that was a very low percentage. And honestly, that's what blows my mind so much is, so there's a good chance I think you probably saw my video about my expectations for the Fed. And I only gave a 10% chance of a skyrocket. Now, we didn't technically have a skyrocket, but things went green, okay? And my thing was either 10% chance of skyrocket, and then the other 90% chance was either we're going to be relatively flat or down a lot. And my biggest belief was that we were going to be relatively flat. Now, technically, we were relatively flat. Things did go green yesterday, right? But I didn't really even expect that because I thought the market was going to react the way it's reacting today, was that the Fed was roughly going to say the same thing, which they did, with the exception of being less bullish on GDP, which I thought was one of the reasons the market went green. And the market would ultimately be red. So I feel like we're kind of seeing what should have happened yesterday right now. Yeah, and this is actually accelerating now. Look at this accelerated decline we're getting right now. We are, look at this. we are now selling off again. Gevo down 8%. Look at EXPI. I'll tell you, EXPI seems to be very sensitive to these rates, which is, I mean, in one sense, I suppose makes sense because EXPI is a real estate stock, right? It doesn't make sense that all of these stocks are losing 5%. No, it doesn't mean you made a bad choice of a company, right? Like, it's not your freaking fault your tech stocks are down 5%. It's just the market. That's the way it works. Markets being a little fussy-wussy. It's, it's the weenie babies. It's literally, and look, let me ask you this. When do you think the market does better, okay? Here, we got to have a serious, like, Topo Chico talk about this, okay? When do you think the market does better? When all the suits, all the weenie babies are like, you can't go wrong with tech. Tech is great. These companies have so much growth. We love them. Okay, that's one version of the weenie baby. And then you have the other version of the weenie baby. You know, Jim, there's a rotation going on. We're going to take all of our stocks and we're just going to buy recovery stocks, the airlines, the depressed sectors, the hospitality, all that stuff. You know, like the suits, as much as if you invest in some of like the tech, for example, as much as we're like, the suits don't matter, they have a lot of impact. Okay, these guys, they trade way more volume than we do, even combined, right? Like all these fund manager weenie babies that are like, well, I don't really like Carnival, but I'm gonna buy Carnival because that's what my clients want to see right now, is because we're reopening. So it's logical to buy Carnival, right? And then that's literally what these fundy people do. I feel like the fundy people are so worried about their clients that they exacerbate these crazy swings here. And that, in my opinion, is one of the things that makes ARK a little unique because they don't really care about the client. They're like, no, this is what's good for you. We're going to keep shoving these peas down your throat, even though you don't want to eat your peas. So yeah, I don't know. My take here, right? So a little bit of a recovery here on EXPI, but still got some big red candlesticks happening here, and I think we're seeing that through the broader market here. Yeah, we are. Maybe as the market's just opening up here, digesting some of the silliness. Yeah, geez, I mean, everything's red here. Look at this. Look at this. You know what? I think it's time to update the title. Market open, pain or rocket? Pain it is. Put that in the title. Yeah. Woo! You gotta respect the red. I mean, soon, soon we're gonna have to jump on over to soon we're gonna have to jump on over to beer instead of Topo Chicos. But let's take a look at some of the other news that we've got here. So what do we got? Goldman Sachs seeks volunteers to move. Okay, well, whatever. Credit Suisse replaces. Okay, fine. Supply swaps. Okay, let's go to featured stories here. What do we got? Philadelphia Fed factory gauge sizzles. Okay. Bizarro Volcker. Okay, this is interesting. Treasury yields spurs bet on inflation. Let's start with this one. Let's see what they're saying here. Okay, that was, I feel like, the wrong click. There we go. All right, here we go. Treasury yields breached level. Okay, yields on the 10-year climbed to 1.75. Okay, we read this. Okay, here we go. Powell has given the green light. Oh, let's hide this for a second here. All right, let's see here. Okay, Powell has given the green light to higher 10 and 30-year yields. And remember, that's what they want. Remember Powell 2 weeks ago when he was tough Powell and not like kindergarten teacher Powell that he was yesterday? Tough Powell 2 weeks ago was like, yo, inflation's up, but that's what we want. That's what we've been trying to accomplish, is higher inflation. We have been trying to perform for you. And we've been failing to perform. Deleted account says, Jim Cramer says this is the bottom of the market. You know, Jim Cramer was the guy on Mad Money going, guys, this is a 7-layer dip. This is a 7-layer crash. And we could just be getting started. And that was like Thursday. The same day, I'm like, I don't know. Like, we could be green next week. Wait, we're green. Like, no. So I don't know. Sometimes a little bit, and maybe that's just the way the mainstream media works, but sometimes a little bit, I feel like the show Mad Money or just the CNBC in general, I don't think it's Jim's fault. I think it's really the company overall. Sometimes I feel like amplifies a little bit of what's going on in the market versus I think what could potentially be taking a stance on a likely reality, like my opinion. And I know maybe it's the unpopular opinion, but it's what I believe, and it's that I don't think we're gonna see this crazy high inflation. So we'll see. Okay. Futures volume surge after. Okay, we're past futures. Okay, let's see here. Treasury 10 years are likely to hit 2% as traders are, quote, coming to view that stronger U.S. growth and a Fed more tolerant of higher inflation mean there is a further upside for bonds. I mean, I do believe there's a further upside for bonds, but I don't actually think we're going to see crazy inflation. The overall tone from the Fed leaves the back end of the curve largely unprotected. Okay. This, by the way, this was one of the reasons I thought we were going to have a red market after the Fed talked, mostly because, look, did the Fed come out and say we're going to do yield curve control? No. Did the Fed come out and say they're going to let banks have more liquidity and extend the liquidity ratios? No. Did the Fed say they're going to buy more bonds? No. Did we expect them to raise rates? No. Did we expect them to taper? No. So all of these things basically lead to the Fed saying basically nothing. and my opinion was when the Fed comes out and says nothing, essentially, the stock market should have fallen, which it just came a day late. Now, they were more bullish, or I should say, they were more bearish on GDP growth, which means they're less concerned about the economy overheating, and they aligned some of their statements and forecasts. But, which, again, in my opinion, led to that temporary bump we saw yesterday. But, yeah, I don't know. We'll see. Okay, so wow, look at Upstart. Really just roaring here. And this stock has hit $100 before, and it appears to be potentially going in that direction here. Let's see if there was any more news that came out this morning. I'm excited, I have to say, to talk to the Shift CEO about Upstart getting into this. We'll see how they feel about that. Is this something they're incorporating? Is it something they already do incorporate? Is it a threat? Is it good? Is it bad? That'll be really fun. So pre-stock market movers, yes. Analysts are bullish on these technology stock. Yep, Upstart being one of them. Okay, raised price. Okay. So Jefferies raised the price target to $81. We just shot through that. We got JP Morgan raised their price target to $111. We are basically heading towards that now. So that's kind of what's happening here. As we got a bunch of bullish price upgrades this morning, helping push up that 38% gain to more like a 50% gain now on Upstart. And the company itself, it seems like a phenomenal company. Yeah. Okay, let's see. Plug Power and Lordstown show trust is precarious. That's what they're saying. Trust is precarious. You know, what's actually really powerful about that headline right here is it kind of reiterates why, what is it? Lucid. Why Lucid, I feel like, is having such a rough time now that it's really time to deliver. And, their stock's a little bit more volatile. Obviously, it's been down with the rest of the tech and EVs. So could be a trust cost there. Prove yourself. Look at this. We're almost at 60% on Upstart. Really incredible. Sustaining to the upside. Good. So on the other hand, Gevo, okay, a little bit of a recovery again here. So we hit some dark red there for a moment again, but are recovering out of that. Same thing at Lemonade, trying to recover out of that bottom. Fisker down 4%, Plug Power, Pinterest back under 70, Tesla 670. See, all of these prices are really range bound, I feel like. Like, look at Pinterest, for example, over the past 2 weeks. Let me guess, what? 70 to like 68 to 75, right? Let's go zoom out here. Okay, so past 2 weeks, Let's see. Let's see what those lines would look like if we drew those. So if we go horizontal line, what is the top here? Yeah, about 75 exactly. And yeah, somewhere around here, 68, right around here. Not the bottom pits. You know, we could potentially even narrow that a little bit more. Could be something like this, 70, right around here, bobbing up and down. Not really doing too much. Same thing with pretty much all of the tech sector. It's just been bobbing around this silliness that we've had. It's up 5%, it's down 5%. It's up 5, it's down 5. Sometimes 2 or 3 days in a row, and pricing goes nowhere. It's kind of exhausting. 10-year Treasury yield nicely over 1.5 now. Volatility index zooming into 3-day is a little bit down, but still up. Under 20 is nice, but yeah. Okay, let's take a quick peek here to see if Mr. Varnes has anything to say, or if we're going to be talking about the border wall again. Oh, okay, never mind. This is going to take a moment. Okay, what is this one? Powell's bizarre Volcker Act. Let's see this. It's not much of a surprise that markets have reconsidered the knee-jerk reaction to Wednesday's Fed announcement. Oh, dang. I feel like that's what I just said in like a 10-minute explanation that they just said in like one line there. That's a really good line. That's a good one. On Tuesday, we discussed various ways that markets could interpret an unchanged dot plot median for the 2023 or for 2023. And it seems as if bond operators are prepared to consider the full gamut of possible implications. In a sense, Jerome Powell has created a bizarro Volcker, or created a role for himself as a bizarro Volcker, armed with an unrelenting commitment to maintain zero interest rates, is what ZERP is, for as long as possible to stamp out undesirable labor market slack. The Fed's choice, and indeed those of other central bankers, raises a fundamental question. Can monetary policy solve a problem that it didn't create? This is a well, I really like whoever wrote this. This is good. Cameron freaking nailed it. This is a really good description. So far on Thursday, the bond market is voting with its feet. Okay, we get it. Okay, what do they mean with this bizarro thing here? The antithesis of a comic book Superman. 4 decades ago, Volcker was willing to sacrifice growth and unemployment to tame the dragon of inflation. In time, of course, victory in that battle conferred significant ancillary benefits to both economic output and financial returns. This is when Volcker's like, that's it. We're raising rates to like 13%, 14% to push this crazy inflation down. Given current valuations, it is certainly debatable whether Powell can make the same claim. The collateral damage in the event of a significant and sustained bout of inflation could be considerable. True, if we get that inflation. All right, let's see here. More fundamentally, Volcker was rectifying a problem created by significant monetary policy in the 70s. And that allowed wage price a classic inflationary wage wage price spiral to take hold. Yeah, what interesting. Okay, so in other words, they're calling Jerome Powell here the weirdo who's basically trying to be so unrelenting, like Volcker was unrelenting against inflation. Jerome's the unrelenting man to create inflation. Will Jerome win like Volcker won against inflation? Except Jerome's doing the opposite, which is, I think, why they're calling him Bizarro, because he's trying to get that inflation. And geez, somebody asked Paul Volcker what he thinks about us trying to get inflation. Anyway, wow, Zillow down 6% here. Really, definitely seeing some good pain here in the market again. Let's see what the CNBC has to say. Let's see what Jimmy's talking about.
Look at that chart. And that is an also ran that is no longer an also ran. You may know it as K. You may know it as I'm looking at to see which one that David knows.
I know them
Talk
all.
about the market.
Right. Jared.
Yeah, Jared. Yeah.
Yeah, not the political guy.
They went to Jared.
Yeah, not the political Jared.
No, I know. Right. Right. How about Tiffany? Oh, that's owned by LVMH now.
Tiffany, you want to? Anyway, we got to talk about these great stories because there's so many bad stories. I'm talking about Gin Drosta's doing a fabulous job. Carl. Just fabulous.
Yeah,
Let's hear
and the
something.
comp guidance for Q1 looking for 80% comps in the quarter that we're in. Pretty amazing. Jim, you're
Okay.
you're going to stick around?
They're going to make jokes about jewelers. Okay. Ay. All right. Let's go back here. I'm going to pull up Bloomberg TV as well here. But yeah, wow. I don't. Okay. Do we see anything that's like way oversold? I know regarding Paul. I know it's sad. That's why I was saying, like, I wonder what Paul Volcker thinks, but he can't think. Let's see what would think would be the better phrase then.
Indicators expected up 0.3, darn close, up 0.2. Now, up 0.2 is actually the weakest since it was minus 6.4 in April. And this number has been actually trending a little on the soft side. We want to continue to pay attention to it, of course. Much of it is lagging, but for all practical purposes, what we're really going to be continuing to pay attention to is how services throughout the country start to add a lot more horsepower into the economy.
All right. So, what I want to do right now is let's see if we can find something that, like, what are some stocks that look cheap, right? And I'm not talking about, it's down 5%. I'm talking about relative to where we have been. So let's go to the day chart. This is what I like to do when I like to see just relative to what we've been seeing, what looks cheap, right? So Bumble, for example, closing its first day at around 73. It's around 69 right now, so pretty similar. I'll tell you, Plug Power looks freaking cheap right now. There are some names. ACIC ran for a moment. Let's see, ACIC. ACIC, whoa. ACIC, the eVTOL company. Pretty sure this is the eVTOL. Atlas eVTOL. I think it's probably better to just say Atlas. Oh, let's do ACIC. Oops. Anyway, yeah, here we go. Specialty. What are they acquiring? ACIC. I gotta verify. What is ACIC acquiring? There's so many SPACs. It kind of gets annoying to track them all. ACIC merger. ACI merger with. Come on, somebody. Where is it? Where is it? Here we go. eVTOL. Okay, well, I see some YouTubes here. Archer. That's what it was. Archer Aviation. Finally. Thank you. So I see some of the comments here. Yeah. So, wow. $10 basically, 10.52. I mean, you're paying 5% over what the pipe investors are paying right now for Archer. And that's dirt cheap. It's the same here with FRX. Like, this is where I bought it. I bought it at like 10.90, and it's like you're paying 9% more than the pipe investors in it. It's crazy. SPACs are just very sold down right now. What are some of the other names here that people say are low? Square. Let's look at Square here. Square, 235. Yeah, Square's got a lot of growth built into that one, but I do like Square. Lemonade's under 100. True. Tesla down from 900. Yeah. Well, good point. Good point. This is true. Lemonade is not Lemonade. Shift. Let's see what Shift Technology's doing. Shift's at 880. This is kind of where it's been bobbing for a while. Palantir under 25. Where have we been bobbing? So let's look at the sort of the bob range here. So recently, and by recently I mean since like February, where have we been here? Well, certainly off these highs. We've kind of been bobbing around. Let's see here. Yeah, I'd say somewhere around. This would make sense. 27 and probably about 24. Yeah, kind of bobbing around this range here. That makes sense. CCIV is off its bottoms nicely. It's not in those crazy low numbers that we saw there for a brief period of time. It is nicely sitting in its boxes again over here. Let's go to the 1 minute. Let's see how it's behaving. Nicely within its lower box here. But $29. Okay, so it's not as cheap as it has been. I mean, this was sitting at 22. Be a little more exciting for buy purposes. ARK down about 3% here. See, like pins over 70. It's not like I'm jumping up and down for it. So that's why I'm looking around trying to see like what can I get that's dirt cheap. I mean, I'll tell you, I do believe there's a chance Lordstown is oversold here. It's pretty dang hated here. And it looks like they must have really sold off additionally after their earnings call yesterday because, well, they're down 9% today. DocuSign, love the company. If I could get them under 200 again, that's just where I would love to be. I think we touched 200 for a second, 204. Actually touched it. Wow, today. We are trending in that direction. But look what's happening here. I mean, you were giving up. Let's go not to 1 hour. Let's go to the 1 day. There we go. It's a little better. We're basically giving up. Look at this. All of these gains since July are essentially being eradicated here, just slowly, day after day after day. No movement. And that in July, that's a long time ago now. I mean, we're closer to July this year than July last year. It's crazy to say. My gosh, July's coming up again. That's bizarre. You probably heard tax deadline got extended. I think it's actually May 17th, not the 15th. They were talking about doing a 30-day extension, and then they ended up pushing it to May 17th. Upstart's the one running today. Let's see. I'm just trying to find it. Anything else? I mean, Wayfair at 330. I can't buy this thing at 330. I mean, I like holding it at 330, but that's pricey. Xpeng. Okay, here's a deal, right? Look at Xpeng's chart on the day here. Xpeng is literally below any price you could have gotten since November. That's nuts. eBay's been sitting at 50 to 60 forever. What else here? ChargePoint, they've had a nice sell-off here. ChargePoint selling off to, where are we? Let's see here. ChargePoint's at, oh, this is Pfizer. Hold on. There we go. ChargePoint. There we go. That's what I was expecting to see. Look at this U. This is like the horseshoe-shaped graph where it's like, hey, you thought you had Tendi since November? You got nothing. All the Tendis just it's like somebody just came and took your Tendi. You don't even have it anymore. It's not burned. It didn't go bad. It's just taken. It's just robbed. This should just be labeled the Motley Fool pump here. Wow, Upwork down 5%. Upwork really not selling off though that far back, right? It's like they really had a run here again in January. They've run also since November, but trying to see something that's like a killer deal right now. I don't know. I mean, Neo and Xpeng are nicely sold off. They're certainly under targets, not as sold off as they were. Same thing with Tesla, the EVs, but the EVs just aren't getting much love right now. Volkswagen down after its crazy run over the last couple days. I'll say they've gotten a nice run. Churchill 29, Bitcoin's at 58,000 here. Snowflake. Oh, Snowflake sold off quite a bit. This is true. Snowflake 221. It's funny when they IPO'd, I'm like, I don't want to buy this. Like, if this has a 2 in the front, it's too expensive. And they have literally been trending. I mean, they just smashed for a moment, but since about December, they've been trending to my sub 200. Dogecoin is cheap. This is true. This is very, very, very true. Let's see. Skills, Dollar General, Rocket is not something I've been adding anything to. 24. Yeah. I mean, to me, this stock is just not a stock that wants to be valued where it should be, because the stock market just looks at it as an unsexy lending industry in an era of increasing rates. People have made fun of me for that before. They're like, see, Rocket Mortgage is sexy. And I'm like, no, Rocket Mortgage is short squeezing. When it was over here, it's like nothing's changed about how the market views it, other than a temporary little squeeze here. It's kind of like the inflation. We're going to see a temporary squeeze up. Let's see for a second what Varnes is saying. See if we've got news about the border wall. Let's see what they're saying.
And now value is front and center with the outperformance. You're seeing it day in and day out. You're having days where the Dow is flat and today, and the NASDAQ's down 230. We've seen days where the Dow was up 200 and the NASDAQ was still down. So it's just a flip-flop of what we saw over the last couple of years. But let me be clear, in the long run, growth always wins out. You find me a company that does $3 billion in sales this year. And
here's someone we like, even though he's got the bookshelf. Right.
In the
growth wins
in healthcare and those arenas.
You predicted 35,000 on the Dow. You made that prediction. I think it was a couple of months ago. I don't have the exact date. Well, we're now at 33,000. Kudos to you, Gary. Yeah, I think you're still holding on. 35,000 this year on the Dow.
Yeah, plus 35. Look, it was about 28,000 when I said it to you. And it has to do with the virus crashing, the vaccine skyrocketing, and the opening up of America, as well as a lot of the rest of the world. And that's where you're getting the Dow-type stocks doing best. Also, interest rates going up on the long end is really helping financials, and that's a big part of that arena also. And today, with the NASDAQ down 230, I see the biggest winners are like J.P. Morgan and Goldman Sachs. So I do believe the Dow, but there's repercussions. I think the NASDAQ still underperforms to a certain extent. And if rates go over 2% on the 10-year, 2.25, it's going to get tougher because Mr. Powell, that maniac, it was just way behind the curve. He actually admitted we're going to have 6 to 8% GDP growth, but we're going to still print $125 billion a month and keep rates at zero, which is absolutely insane.
All right, careful of the use of the word maniac there, Gary. This is a family program. You know how it is. Thanks very, very much for joining us from Orlando, Florida, the great state of Florida. Thanks, Gary. All right, I want to bring Susan to this one because
maniac is a bad word, really?
Down 2%.
2.5%, yes. So Apple's leading the techs lower today. As you know, we have that NASDAQ sell-off taking.
Look, Apple's been bobbing around 120. This isn't news. It's no news that Apple goes up or down around 120. This is old news. We hit some crazy euphoria of 140, which was not so. We sat at the 130s for a little bit, but this 120 bob is old news. The 3,000, 3,100 bob for Amazon, old news. Go talk about the border wall again. Oh my God. All right, let's listen to Bloomberg.
Definitely want to tilt toward more cyclical rate beneficiary areas.
Well, Jill, and that brings me to, you have a 3,800 target on the S&P for year end. That's about 150 basis points or points below where we are right now. What's the downside catalyst? Is it yields?
So I think when we look at last year, we saw a lot of multiple expansion within the market. So sort of anticipating the 20%-ish earnings growth that we're calling for this year. And, now we're seeing more signs of euphoric equity sentiment in the market in terms of, equity allocations are continuing to inch up. We're seeing companies that surprised to the upside this past earnings season did not outperform, which last time we saw that happen was around March of 2000. So,
that's true. We talked about that a little bit too, about how, good earnings aren't going to be great. Bad earnings are going to be bad.
See that rotation that can actually point to downside risk for the S&P 500, given the market cap is tilted towards some of those big mega cap growth stocks.
Jill, we're going to leave it there. Really appreciate your time today.
It's basically saying we've got more of a risk of a market pullback because we are sitting at higher valuations.
Volkswagen, the stock absolutely surging on the back of its battery day Monday. Today, we're starting to see that trade unwind a little bit. It's been driven a great deal, to excuse the pun, by US retail. Today, the ADR, as you can see, starting to come down, and the German stock listing to come down as well. We're down by around 7%. Kaylee, up next. One central bank is certainly getting into gear in terms of turning more hawkish. The Norwegian central bank could hike by late this year. We're going to speak to the Norges Bank governor, Øystein Olsen. That conversation next. This is Bloomberg.
Hey, it's the Norwegian Jerome Powell. All right, let's take a look here again. Jeez, I mean, Williams Sonoma and Upstart just wrecking it today, absolutely killing it. It's really, really impressive. And I'll say Williams-Sonoma's numbers yesterday, when we looked at the fundamentals, those were the earnings were really, really good. And the multiple that you're paying for this company is so freaking low. And I think that's why we just saw the skyrocket here. Really, really, I was really surprised seeing those numbers. It's like, wow, a cheap company. Now, obviously, the market does its weighing based on its future potential. So, it's not like I'm going to go buy Williams-Sonoma on a day like today with how green it is. AMC up 6%. Where's GameStop? Where's a good old GME? What's GME doing? Nothing. 2%. Sitting there around 200 again. Corsair Gaming, Neo, all these guys down 3-4%. Lots of red, but we're really not seeing. Let's see here. Let's go with the 1 minute chart. Okay, well, Lemonade is kind of going straight down here. Lordstown's actually coming up a little bit. CrowdStrike had really good earnings. The CEO was on Jim Cramer there a couple days ago. We videoed him with Lucid and reacted a bit. Weird. Just weird. It's really it's simple. It's literally just sell everything. There's no fundamental reason beyond this little silly chart here. And every time we hit a new high, we get the sell off. That's interesting. It's not as extreme as what we saw 2 weeks ago. And I don't know if we're going to return to what we saw 2 weeks ago because, and this is another big thing, like when are we going to see that again? I mean, I think we're going to keep seeing this bobbing of volatility, but the 2 week ago pricing, what's interesting about that is that was almost like sudden fear because it was the first time we had seen such a rapid acceleration in bond yields in quite a while. Really, really a nice, this sort of range right here. I'd say probably right here to here. So this region right here. This is such a rapid acceleration in yields. See, this is normal right here, right? Like you get these ups and downs, and you just really trend. Like the easy way I like doing this is going back to like what, 4th grade, 5th grade, and talking about slope. Rise over run. Oh my gosh, rise over run. But yeah, I mean, look at, for example, if I draw a line here, right? Look at the slope here of these gains of interest rates. And this really helps you see how the acceleration or the rate of change has changed. The rate of change has changed. Look at that. Look at the slope of the red line versus the acceleration in interest rates over here. And I think that's what's making the market nervous is you are now on a new trend line. And it's much steeper than what we've had previously. And then if we go back even further, I mean, over here we still have more of we have a downtrend. So you have these sort of inflection points, right? This green line here, you see green is your downtrend. We get the inflection point around August, September, where we start trending up. And then this inflection point of really accelerating, was really realized in mid-Feb. Now, okay, what would it take, in my opinion, for us to see this sort of Feb crash again? Well, probably, we'll continue to see this weird volatility if we stay on this curve here. But I mean, let's say we saw something even steeper, right? Like let's say we saw something like this yellow line where we just quickly got to 2% really, really freaking fast. Like this ended up at 2% before the end of the month. See, like the end of the month is right around here where the mouse is. And so let's say we got to 2%, which also is where the mouse is, before the end of the month. That would be another massive acceleration in how quickly this yield is going up. That could lead, that in my opinion, could lead, another change in the slope like that could lead to another pullback like what we've seen over the past few weeks. This is one of the reasons I'm not so jazzed about jumping up and down, like going to, buy something right now, with the exception of the one stock I bought yesterday, which stay tuned for that. But anyway, yeah. We talked in the course about that one stock, but Anyway, which of course, keep in mind that coupon code has been extended. Tomorrow, I think tomorrow's the last day people are really getting those big stimulus checks that we were waiting. So take advantage of that 38% off coupon code. We're briefly extended for those stimmy checks by popular request. I think it finished at like 79% of you were like, yeah, extended a few days for the stimmy checks when we voted on Twitter. But anyway, I mean, like, I don't think we have support for these prices even where they are right now. Sure, we've been bobbing up and down at some of these prices, but again, if that slope changes again and we get to 2% by the end of March is going to end up going down. March, Feb are going to end up going down as, in my opinion, possibly the bloodiest times in 2021. Because personally, I think we're going to go through this. You know what this is? This is like weaning the weenie babies off their pacifier. Like, you go through 6 weeks of hell, getting your baby off the pacifier. It's okay. I know you're a weenie baby and you get a sense of comfort with your pacifier. But it's done. You know what some parents do? A la Lauren. They cut the pacifier, like the tip of it. So they put it in their mouth and it kind of just like falls out. It's like, oh, I don't like it anymore because it's broken. It's pretty sad to see a weenie baby get their passy taken away. Love kids. But anyway, I feel like a little bit that's what our weenie babies are going through in the stock market, the weenie baby being the fundies. And they're like, well, I got to break up with Ted. Yeah. But, what's going to happen? They're going to mature. I'm gonna go, okay, I don't need a pacifier anymore. I'm not a baby anymore. And 2021, I think, is gonna end up going down as a very strong and positive year. I'm bullish on the year. I'm not bullish on the short term. Like the next really 3 months, I'm more nervous about than anything. Just thoughts, of course. Okay. Let's see. Let's see if Jimmy has. Well, let's see what he's complaining about. Or he might be off now. 7 o'clock. Oh, okay. Well, they're not even on. Let's see if they're talking to the Norwegian Fed, or did we miss it? Oh, here he is. Here he is.
Over time. And our estimate now is that we regard a policy rate, or to be more precise, a money market rate, around, say, 1.5% and 2% in nominal terms as relative as normal. So that's perhaps the level we target when we seek to normalize the rate.
And you see yourself getting to that over the next 2 or 3 years. That's the kind of timeline that we should be thinking about.
Yes, that's correct. Our precise, 3% the forward guidance in terms of a policy rate path, which is quite precise, and it's never a promise. So there will be changes to this path, but just as we see it now, the path starts from zero, moves gradually upwards. First hike this year, second half, couple of high or increases next year, approaching something between 1.25 and 1.5.
So the Norwegian guy is talking about raising rates this year. And sometimes you get countries, they actually follow each other. It's kind of like, oh, well, they're raising rates. We should raise rates too. It's actually surprising to see that in Europe first, though.
In the case, our main task, there's a discussion which is understandable, giving, for instance, the quite expansionary fiscal policies that are pursued in many countries these days for good reasons to recover from the crisis. And there is a question whether that will imply inflation coming back. But I think our view is that we focus mostly on Norwegian conditions and underlying inflation prospects in our own country, which over time will be quite dependent on what will be the cost rate or cost changes, the wage rate increases, which we focus on.
Okay, so he's talking about inflation being basically pegged to wages going up. Let's listen for another 30 seconds here.
Wages is higher than our trading partners. But that's some time ago. And more recently, all parties in the labor markets are quite concerned about competitiveness, and we have seen wage rates around, say, 3%, somewhat lower, slightly higher. And that's the prospects that we see.
All right. Okay. Kind of a hurry up and wait, but maybe the Norwegian central bank will be raising rates first in the EU. Interesting. We'll see what kind of precedents that sets. So far, I have to say, I don't think we're getting much support here in the market. Everything's just feeling, certainly at the day's lows so far. Twilio just going straight down here. We've got Upstart going straight up. We're almost at 70%, folks. Oh my gosh. Look at this run we've had since the AM. Wow. Absolutely nuts. Express, it kind of feels like it's coming out of nowhere here. Going from $4 to about about $4.77 rather, to about $5.52 right now. AMC trying to run a little bit as well. Oh, Sundial. Let's take a quick look here at Sundial. Sundial growers. Q4 loss widens. Okay. Let's see here. Sundial. There we go. Okay. Revenue came in at 13.9 million Canadian dollars. Okay. Let's zoom out a little bit. Okay, where were the earnings? Yeah, here they go. Okay, misses on revenue. That was actually a miss on revenue. Loss widens as revenue declines. Ugh. Let's look at Sundial's earnings right here, or let's look at some of their numbers. This has obviously been a very popular momentum stock that I don't think was, really being bought for fundamental purposes. But oh wow, okay. So to get the fundamentals, I got to tell you that I'm old enough. Okay, whatever. There we go. 1928. Sounds good to me. Full year and fourth quarter 2020 financial operational highlights. Okay, these are the highlights. Do we have statements? Yeah, we do. Here we go. Okay. Okay. Let's see here. The Canadian statements are always so different. So brief look here. Let's see. Net loss from continuing operations. Q4 64. Is this thousands? Or let's see. What are they measuring this in? Or hundreds? I don't know. Okay, well, they're not going to make this easy. These charts are not actually easy to look at, or not charts, rather, these financials. I don't know, maybe it feels like their website. It's just not very, it's very, very low contrast. Okay, I think I'm going to have to pull these up separately and maybe download these, because this is a little tricky here. All right. We could try really briefly here. Let's go to Sundial Investor Relations. Let's try going in this way. That was not so ideal, the way we were seeing that on the Bloom. Okay, let's see here. I'm old enough. There we go. Okay, investor resources, SEC filings. Okay. All right. We'll wait. We'll give that a second. We'll come back. We'll come back to Sundial. I might have to. Let's see here. 5 key. Okay. Well, let's look at this. Let's look at a quick summary here on Sundial. 5 key takeaways from Sundial's growth. Let's see what we got. It'll be a little faster. Number 1, the firm announced a net loss of 64 million Canadian. Okay, gotcha. That was an improvement on both a quarter-to-quarter and year-over-year basis. Comparative respective losses were this. Okay, net cannabis revenue of 13.9 million was up 8% sequentially, but down more than 5% year-over-year. That's not so good. The results showed adjusted earnings before EBITDA 5.6. Company said average gross selling price per gram was actually lower. Okay, so this is actually interesting. This is a potential concern is the amount of how do we say it? Competition that we're potentially getting in the cannabis industry, right? If cost per gram comes down, that starts affecting margin. Let's see. Sundial anticipates continued downward price pressure throughout the industry in the coming year due to continuing competition and relative oversupply. Wow. Talking about an oversupply and potentially in the cannabis market. Oh, speaking of which, look at this.
There's plenty of other ones that have unique and interesting effects around sleep or pain or mood. that could be safe alternatives as we invest as a country and as a society in figuring out what's going on. So we're bullish on all of that. In the meantime, we're going to create safe, consistent, branded consumer products for Americans to consume and offer well-being. We think the hook is with the brand, and whether it's Bebo or Rhythm or Dog Walkers or Can, we can win.
All right. Well, Ben, thanks for joining us today.
Thank you.
Yeah, I see a comment here. Somebody saying financials matter very little to me for weed stocks. I'm mainly interested in who's going to be ready when legalization hits the entire North American continent. Yeah, and I agree. I think that's happening. The problem or the danger here is it's a little bit like biotech, right? Where you're making these bets on, okay, are we going to get FDA approval or not? Are we going to get into the U.S. market or not when that legalization comes? And when is that coming? And anytime I feel like we're waiting on government regulation, it feels like we're throwing darts, basically. It's kind of like, oh, yeah, we think they're going to do really well. We think they're going to do really well. And usually, if you're going to do that, it almost feels like you should just have a nice little basket of these stocks. Like if you had, a cannabis ETF, or you picked your favorite 10, then even one winner can help the whole basket. But just to pick the one winner, it's a lot tougher. But that is interesting about a potential oversupply in the cannabis market. Something to consider if you're playing weed stocks is oversupply considerations, which to me does make Clever very interesting, because Clever plays at the lower prices, certainly for extracts, because they're growing in South America rather than in Canada, where prices are a little bit higher. All right, so JP Morgan actually up 1.6. Look at this rise in JP Morgan right here. Yeah, there you go. Clever, exactly. MJ as an ETF is the best way to go. I don't blame that at all. You pick your favorite 10 or something like that. It's good. But yeah, look at these runs over here. Even GM's running over here. Wow, GM probably running after all the excitement around Volkswagen. Sundial actually, up 6% on that earnings. It could be just as it kind of falls into the spotlight again. We see a run. Cooling off that near 70% at Upstart. We do have Lemonade, Twilio, Workhorse, Nokia, Pinterest, all these guys really suffering here. To me, this is really where I want to be shopping. It's very contrarian though, right? You get a lot of, why would you buy when it's red? No, throw the money after the winners. No. It's the wrong psychology. Or it's not, I shouldn't say it's wrong. It's just not the psychology I follow. I like going shopping where the pain is. I'm gonna go shopping where the blood is, where we gotta, to be happy, we gotta play music like this.
Oh man, your boy Kevin just lost lots of money. Oh, but that's okay. I am with you. Here we go. Come on, push it. Find the dip.
Oh, I love it. So good. But yeah, lots of that red. Wayfair doing exceptionally well today, though. 4% on Wayfair. Ford, GM, these guys trying to maybe catch up a little bit after the craziness that we've seen at Volkswagen. Jumping on over to, let's see, Bloomberg here for a moment. Let's see what they're talking about. U.S. and China begin to talk.
Yet, clearly, these top two diplomats who are flying from Beijing to Anchorage for this meeting, they wanted, as Jenny said at the beginning of her piece, to get out of this meeting specific process, process that a strategic dialogue would restart.
All right. So somebody says Dollar General is bleeding. I don't really care right now about the specific dialogue we're going to see in China between the Biden administration and China. I think they're going to be just fine. So Dollar General, I'm pretty sure, reported. Today was the day they were going to report. Let's see. Dollar General. All right. Come on. Dollar General. Here we go. Okay. Dollar General. Individual company news. Let's see what we got at Dollar Gen. So general forecast for 2021 decline. Okay. Dollar General tumbles on Q4 earnings. Not a huge surprise, mostly because Dollar General was a big play during the start of the pandemic, when it's like, oh my gosh, we got to hoard all the possible cash that we can and Dollar General was a really good opportunity for that. But now we're kind of trending away from that, I believe. But it also looks like there was an earnings miss. So let's see if we can pull that. I like it when I can get it on the news list here. So let's pull up the Launchpad. Let's see if we can find what happened here. Okay, here we go. Okay, Dollar General announces retirement of vice president. Here we go. Earnings per share of $2.68 for Q4. Capital expenditures of around $1 billion in 2021. Q4 sales. What? Hold on a second. Okay, here. The earnings per share for 2021 that they're forecasting is going to be $8.80 to $9.50, which is under the consensus from Wall Street. Hold on, let me move this. Under the consensus from Wall Street of $10.73. Dollar General fourth quarter EPS came in at $2.62 versus the expectation of $2.73. So definitely a sort of a miss there on the consensus. They still went up. Their sales still went up 12.7%. I think it's just that forecast is not as exciting as the Dollar General had really hoped here. Dollar General now sees 17,000 new store opportunities. COO speaks on analyst teleconference. Oh, so they're having their phone conference right now. Nearly 12,000. Okay, so now they're trying to pump some love back into the stock. Let's see how they're performing. Oh, Upstart just went over 70%. That's crazy. Dollar General. Look at the Dollar General. Down 7%. Yeah, declining on the day here. 7% is actually, relatively not that horrible compared to some of the other madness going on. Upstart, though, they are taking the cake today. Look at that. They were up 35% yesterday? They just went up another 35% just in this opening here. We could have just started this live stream and bought it. And that would have been nice. Oh, well. It's really, really incredible. Now, it has been at these levels before. But let's see here. I don't think it's been much beyond this. I think that's pretty much a cap here. Yeah, we just hit an all-time high. So we previously hit about 105, and we just hit almost 106 as an all-time high here. Express running. Express is trying to come back. Express up 22% here in the day. Let's listen to this for a moment. What's this?
Bolster the middle class and bring back manufacturing to the U.S. How can you make the case for a higher corporate rate versus some of those other countries? I don't understand how the two align here. That's the other argument.
So I think what we want to do is we want to attract manufacturing to the U.S. You're absolutely right. We've had domestic manufacturing incentives before. We support them. We just don't want to penalize companies who are operating globally. We see companies who do operate in foreign markets. 95% of consumers overseas, 90% of what is produced, goods and services overseas, is sold into those foreign markets. So we're all for supporting domestic manufacturing. We're supporting globally competitive companies across the board because we think that's what's good for America.
Okay, just talking mostly politics here. Biden administration. Yeah, we support everyone. All right. Fisker down to about 20.6. The trade on that one was really decent around the last week of February. We made a little bit of profit swing trading it. Not a stock that I plan to hold long term. Actually, I don't think I have any Fisker left. Pretty sure we sold out completely. I don't know. Maybe there's a tiny little bit. But swing trade was certainly sold out. The Roblox here. Look at Roblox coming back off its peak highs here. Hit 77 intraday. Everything's. Maybe I shouldn't say everything. Let's look. But it does feel like things are mostly softening throughout the day, over and over and over again here. A little bit of a recovery on end phase. Invitae. These guys are at bottom here. Pinterest, Bumble, Workhorse, mostly at bottom here. Lemonade's trying to recover. Affirm. This is just the gift that keeps on giving. It just keeps going down and down and down. Let's see here. Oh my gosh, look how low we are in Affirm. It's crazy. Remember, IPO, we closed at 95, and now it's at 76. Just keeps going lower. Craziness. AMC, Wayfair. Woo! These guys doing well. But everything else, even the Amazon, wow, everything else doing poorly. It's going to get to a point where if these guys break some of the support levels that we've seen and sort of this bobbing, and we get that continued sell-off again, it's going to get to that point where maybe it makes sense to start selling off some of the less likely to fall hard Amazon and Apple, have some more cash, and then really go shopping. Do you think Ride can deliver on its promise to be in production and on the road by September? I mean, that's the big question, right? But yeah, I mean, look, after you get slammed by Hindenburg, yes, probably not a horrible day to buy in, right? At $13 here, it is nearly at the lows since, I mean, we were here in November and we were here in August. That's crazy. Look how low we are now, 13.3. That's crazy. Yeah. All right. Upstart's run just continues here. It's so good. Good for the company. And we are now at all-time highs on Upstart. We just broke by about 2 points here. The previous all-time high. Wayfair is also continuing its run. Really something else. Let's see, is there news on Upstart or why? I mean, beyond what happened yesterday, right? The acquisition talk, the first 35%. Did we get more? Let's see, Upstart. Company news. Oh, a bunch of price upgrades. Yeah, that's right. We had the Jefferies, the JP Morgan, and some more upgrades here. Wow. What a day. What a day. Well, let's look at the 10-year yield here again. Let's see what's going on at yields. Let's see. Looks like I put in Upstart a few too many times. Let's close some of these Upstart tabs. And we can look at the top news here in a sec too. Let's look at the 10-year yield and maybe the VIX and see if we're, what's going on. Although we're not seeing a lot of up and down. We're seeing a lot of just down. Oops. All right, let's go to the line chart on the VIX. Oops. Here we go. VIX index. There we go. GP. Okay. VIX. Okay. Up again a little bit, a little over 20. And okay, we're down a bit. We're off that 1.75 level. But we're at 1.73. Still that uptrending trajectory pissing people off. With the exception of Upwork. Woo. Yeah, Volkswagen down 8%, Lordstown down about 10%. I mean, you're right to say Lordstown is dirt cheap right now. There's no question about that. Like to me, if there were a company to research right now, it almost makes more sense to research Lordstown and your belief on Lordstown than it makes sense to research Upstart at these prices or at these changes in the day. Might be something to consider doing. CRISPR, how's CRISPR been doing? Let's go CRISPR on a year. We are at, we're about November pricing. And beginning of December pricing is more accurate. Basically 2021 gets eradicated. Yeah. Okay, cool. Well, I think that'll do it. If you like this app that we use here, make sure to get your 2 free stocks with Webull. Deposit $100 with Webull, link down below. Make sure you come back in an hour and 20 minutes, folks. We are going live with the CEO, the co-CEO of Shift. Shift CEO live. That is going to be at 9 a.m. Pacific time. So come back for that. I will create a redirect right now. So that way, when I hit end on this live stream, you're going to get a redirect. What I encourage you to do is turn on the reminder, because when you turn on the reminder, you'll actually get a notification compared to YouTube when usually it doesn't. So you'll get that. Make sure the prices will be going up in the programs. So do consider taking advantage of this 38% off coupon if you have not yet. You remember, you get lifetime access to the lectures and any added content. So folks, I will see you later. Thank you so much for being here. I'm excited for the Shift interview, and we'll see how this madness evolves. Thanks again. Bye.